Johnson, I'm not sure if you've had time to look through the numbers, but your view on the performance of East African Breweries for the full year?
First of all, I'd like to wish Alicia a happy birthday. Happy birthday, Alicia.
We'll pass it on to her.
Then secondly, well, I've not really looked at them very much, but I think they are good, given that they have taken a huge investment just the other day. I think they concluded buying Serengeti Breweries in Tanzania in November. They've done a good job in trying to integrate it, bring it up to standards, and that has helped them at least maintain profitability. The other challenges were there as well, of course, inflation, and they've managed their costs pretty well as on that front. Their cost of goods sold has remained basically flat. And if you look at other factors such as the Alcohol Controls Act, well, they have weathered that storm as well. So I think they've done pretty well so far.
Johnson, do you think that East African Breweries has the financial muscle to be able to take on an SAB Miller, who of course is the second largest brewery in the world in its home market, Kenya?
Well, for me, I wouldn't be so much concerned with the financial muscle. Well, they've got a strong balance sheet, they've got very little debt, they've got the backing of Diageo as well, so that should count for something. But more importantly is their brand strength. And the brand strength within the region is something to take note of. They've got opportunities as well, especially in the spirits market. Now that people are going to be drinking at home a lot more often, so they've got opportunities. Of course, we expect SAB Miller to offer some challenges in terms of competition, but I think they've weathered the storm before, and they could continue doing the same as well.
Let's move on to Crown Burger, that of course a paint maker and distributor in Kenya. 16% rally in that stock yesterday. Investors really liking the numbers coming out of that company. First half earnings per share up 7.8% to 1 shilling 93 cents. That backed by an increase of 6% in sales. Net profit for the first half up 7.8%. Margins though under pressure for the paint maker. What are your thoughts on the numbers?
Well, I'll start from the top line, which was expected. We expected growth anyway because the building and construction industry has been growing. Still expect some strong growth, and the Crown Burger have a sizable proportion of the especially the high-end market, so they should be able to continue holding on to that. They've also been taking a foray down into the medium-sized markets, and that could only be good for them. So they benefit from two things: from growth of the industry and from entry into new areas which they hitherto had not really considered much.
We've got a lot of numbers, so I'm just going to move on to the next stock. Let's go on to Total Kenya. Dismal results out there. That company's earnings per share down 73.6%, 46 cents there. Price controls impacting the company. They're losing market share to the likes of Kenol Kobil. If you just look at Kenol Kobil's net profit for the first half, that was up almost 83% year on year. So stark contrast to the local oil marketer. What are your thoughts on Total going forward?
Well, Total is not exactly quite like Kenol Kobil. Kenol Kobil has become a regional company. Total Kenya can only operate in Kenya because Total, the mother company based in France, also operates in other countries through other brands. So they're limited in that regard. Secondly, Kenol Kobil had approached the industry differently. They developed strategies that will be able to increase margins if they play around with their stock. Total didn't have the same ideas, of course. They just approached the market as they had approached it previously, and just like other oil companies, they suffered in terms of earnings and in terms of perhaps even market share, because if Kenol Kobil they were able to increase storage space and what have you, and be able to hold more in terms of current assets, and that has helped them weather the storm in terms of regulatory risk and of course price other attendant risks that come with rising costs of fuel.
But also, you say it marks the competitive advantage that the likes of Kenol Kobil, which is a regional player, has over a subsidiary of an international oil company. So going forward, Kenol Kobil appears to be a stock favorite in the sector. Would you agree?
Yes, yes. There's still so much headroom for growth. Kenol Kobil has been able to, through management of inventory, been able to manage its margins appropriately. Total, on the other hand, some of these strategies are still open to them. So all they need to do is just look at the business differently. Whether they're doing that, I'm not too sure. But there's opportunity for growth nevertheless. Kenya is still a growing economy. There's still a lot of opportunities, and not just in the fuel sector. In the automobile fuel sector, but there are also other sectors as well. Like air is growing. The South Sudan. So those are markets that probably they could tap.
Very quickly, Standard Chartered's numbers out. Banking stocks have been under pressure in the past few sessions. Government securities hit their bottom line there, but net loans and advances still up more than 66% year on year to 83.7 billion shillings. So if you look at the core business, it still is doing well there.
Yes, it is. It is, and unlike most of other banks, which moved their bond portfolios to hold to maturity, they didn't. They just took up the losses, and I think they have a clean book. Whereas some of the banks are holding assets, if you could argue, at inflated prices. So in that regard, I'm happy with that. And then secondly, if you look at the business of Standard Chartered, they're lending to corporates. Corporates are more in risk. They manage the risks better, so they're better credit-worthy clients. Yeah. So in that regard, again, Standard Chartered, I think going forward will probably be a stock you may want to own if you wanted a defensive stock in the banking sector.